It's consolidated now to where the top three airlines each have around 25% of the market. You add Southwest, you're close to 80% of the, or probably 85% of the market. It's a commodity business, but the incentive structure, Bill mentioned the incentives for new entrants and things like that, but the internal incentive structures now are based on return on capital. The economy doesn't have to get any better. They don't have to do anything different. They're just so cheap as it is. So Delta has a 15% free cash flow yield. If it were a high yield bond, it would be double the current price. And they're returning 75% of free cash flow to shareholders. So I think Warren's timing on this, or Ted or Todd, whoever bought him, is really good because they've done poorly up until now. Delta's still down 7% for the year. And what's interesting is that the things that drive airline stock prices in the short to intermediate term are unit revenue, which Delta thinks will turn positive in 3 to 6 months, and then GDP growth, which tends to have a very high correlation with it. And GDP growth is going to start to accelerate. So you've got cheap stocks with the catalyst in place. And
do you think all are cheap? I mean, this is a question. I won't call him a dog. I was saying, well, what did we say? We said in the 6 o'clock hour, we said, who are the winners? And we said, who are the dogs? Is there a skunk in there?
No, I mean, something like Hawaiian is expensive compared to the other ones. Alaska is a high-quality name that's more expensive than the other ones.
Because there's a takeover premium? Because people think something's going to happen?
Well, with Alaska, it's just because they've run the business so well for so long and been able to earn above the cost of capital and have a protected root structure.
So I've always argued that a vibrant airline industry is good for everyone. Obviously, it's good for shareholders and things like that. Is it good for the consumer that they're able to be so profitable?
I think fares are down in the last 12 months. So I mean, it's
not down as much as they would be in a purely, it's Andrew's point, in a purely competitive environment where people would be undercutting if there were routes, if everyone could compete on the same routes. They'd even be cheaper, but the profitability would go down. Margins would go.
They could be cheaper. They could be.
But is it okay? I mean, we don't want the airline industry we had when they didn't make money for 20 years. That didn't help anyone either.
For 100 years, yeah.
So it's positive for society, or should consumers getting down?
It's an extremely competitive industry, and they compete on individual routes. They compete internationally. So I don't think you're looking at an industry where they can raise price consistently over time.